This is Bloomberg.
The energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic and there are a handful of things going on. I think all over the world there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely. But I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
In the fourth quarter were dramatically impacted by the Delta variant. And while bookings bottomed out and we're clearly on the road to recovery now, a lot of the fourth quarter was impacted in business offices that were going to open in September. That's been pushed back to January.
It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. I'm John Hyland. Moderna says its COVID-19 vaccine showed a strong immune response in younger children in a late-stage clinical trial. The company says kids between the ages of 6 and 12 were given half the dose initially given to adults, spaced 28 days apart. Moderna says it plans to submit the data to the Food and Drug Administration, as well as the European Medicines Agency and other global regulators. And New York and the rest of the Northeast is at risk of flooding from nonstop showers after a separate weather system dumped record rain on Northern California. Flood watches reach from southern New Jersey to eastern Massachusetts, and heavy rain promises to sweep the region through Wednesday. A low-pressure system across the Midwest is getting the rain started in the east and will be joined by a second storm forming off the Atlantic coast later this week. And that's the Bloomberg Business Flash. Alex, Danny.
So, Danny, this is just crazy. I mean, first of all, we have over 3 days we could see more floods. We did not do well with the floods last time back in September when we had the aftermath of Hurricane Ida. And at the same time, on totally unrelated news, we're looking at potentially a colder November for the Northeast and New York, which means natural gas prices now are spiking yet again, up another 7% here.
Yeah, and all I can think about is last winter when you and all the rest of the New Yorkers just ate outside for every meal. I don't think that will be physically possible. If you have to do that this winter, you might need to be eating in a boat.
No, we're doing it. It's happening. We already have okay, so I've only eaten inside twice. I'm one of those people that's weird about it. So we get, you do the layers but now we have to do the layers and then like an umbrella and something like that.
And an oar. Oh, God. Okay, well, the next few days could be really ugly here for New York and the Northeast. All right, coming up on the program, we got the European close is up next on this Monday. It's a really, really busy week, a little bit of a softer start to that week, but we're going to get the budget on Wednesday from the UK. That's going to be huge. Looking forward to that. This is Bloomberg.
1972 Madison Square Garden eyelet jumpsuit, which is arguably, from what we're finding out, probably one of the most important jumpsuits of Elvis's entire career. So it marked so many milestones, really, for him. It was used for an album cover. It was used when he performed Madison Square Garden, and he was the first performer to ever sell out 4 nights straight in Madison Square Garden. So he really started that whole thing that we see now in pop culture, where when you make it big, you do Madison Square Garden. So we're super honored to have it. I can honestly say that COVID has been unbelievable for internet-based and e-commerce businesses, because we have a captive audience. We have people home that really want something to do and need entertainment, so we do our best to try to give it to them.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Happy Monday, everybody. Here's everything you need to know from Europe at this hour. Bank gain, bank pain. HSBC topping estimates with the buyback coming shortly while Monty Paschi searches for a plan B. And Turkey tumult. President Erdogan wants certain foreign diplomats out of the country. The lira sprinting towards its next crisis, now up on the day. And show me the money. Advent International is targeting about $25 billion for a new flagship fund. And we're going to speak to the CIO of another European PE giant, Pi Partners, Frederick, still no. All right, let's, Danny, if you take a look at what's happening in the market, I feel like it's a very busy week when you wind up having earnings coming out from Europe and the U.S., but I'm not really sure what's happening in the bond market. I feel like that's really where we're taking direction from. And today I feel like it's, again, the BOE, maybe walking back some of those rate hikes.
Yeah, and the BOE is so significant, Alex, and maybe it's just because I've been living here for long enough that I'm turning into Guy Johnson and think the BOE is the most important central bank. Yeah, you know, the accent's soon to come. But we definitely saw the UK lead when it came to inflation expectations. We saw the UK lead when it came to central banks' hawkishness. So if they're starting to pull back, that, of course, has significance globally.
Yeah, absolutely. So tell me where we are with European markets, where we're at.
Yeah, we're really struggling for direction here, Alex. It's been a back and forth kind of day, a little bit of whiplash, but at the moment, we're standing at a market that's basically the dreaded unched. We're up just 0.01%. Again, it's this mix of earnings versus the bond market, really trying to find a narrative and struggling to do so. But one of the stronger markets today has been natural gas. Those are Dutch front month natural gas futures we're looking at here. And these ones gaining 1.3%. It's really a mix of the worst of worlds. You have the U.S., as we were just talking about, Alex, likely getting colder, so gas futures moving up because of there. You have Russia flows declining and outages in Norway, all that resulting in another day of stronger natural gas prices, Alex.
Yeah, very similar here in the U.S. You have New York and Northeast weather. It's about to get colder. So here in the U.S., you had over the weekend Janet Yellen trying to calm those inflation expectations after you saw that huge jump higher in break-evens on Friday. It seemed to be somewhat successful, particularly when you have some officials in the BOE saying maybe now's not the time to hike rates. And that's kind of calming the bond market. You see some buying coming in the front end, still a little selling in the 20s and the 30s. And that's really can be echoed across the board. So the NASDAQ is now up 0.4% as we're sort of off those high yields. Also, you have a lot of tech earnings coming out this week. Over 160 companies in the S&P reporting, a lot of them the big tech. Quick check here on Facebook reporting after the bell. Facebook papers not doing much to the stock in trading. And talk about inflation, it's hard to do that without talking about natural gas prices as well as crude. Now we're down to about 84. We were very close to an 86 handle, which would be right where we were back in 2014 before the really big shale boom. You say the commodities, you can strip them out. But Danny, honestly, if you have really high commodity prices for a longer amount of time, that feeds through into inflation expectations. It feeds through into consumer spending. And that, obviously, the longer term risk and why maybe some central banks are walking things back just a touch.
Yeah, and Janet Yellen as well is saying that there could be inflation lasting in the first half of 2022. Well, Alex, you mentioned tech. It might be all about tech earnings there, but here in Europe, it's all about bank earnings. And HSBC shares, they're up today, and it's bullish for the month ahead, kicking off a higher than expected share buyback. The bank CFO spoke to Bloomberg's Manus Cranny earlier.
Today's $2 billion buyback is an important step, I think, and it shows confidence that we have in the underlying performance of the business and outlook, and shows a commitment to try and normalize our capital base.
Let's dig into this more. Joining us now is Harry Wilson, Bloomberg finance reporter. Harry, I was talking to Jonathan Tice earlier of Bloomberg Intelligence, who said that usually HSBC is pretty conservative. What do we make of the more optimistic outlook than normal coming out of the lender?
I think really it's all about rates here. What's really changed is their view that interest rates are going to rise, and they're going to rise pretty quickly. So they're talking about seeing 2 to 3 hikes in UK rates by the end of next year, and saying that 1% is possible. And that makes a huge difference to their earnings. So, roughly speaking, you're looking at adding about $7 billion to earnings over the next 2 years if these type of rate rises come through. And that gives them a lot more flexibility. It certainly means they'll have a lot more excess capital, which is why they're now talking about these buybacks and further buybacks coming downstream. And also they're talking about M&A as well. They've given new guidance again saying that they're looking at more bolt-on acquisitions. So it gives them a lot more sort of opportunity to be optimistic about their future.
All right, Harry, thanks a lot. Bloomberg's Harry Wilson joining us there. Now let's get to the other part of the bank story, and this is a very different side. Monte Paschi fortunes definitely not as bright as HSBC's. You got talks to sell the Italian lender to UniCredit fell through over the weekend. Joining us now is Bloomberg's Luca Casraghi. He leads the team covering European distressed debt. What happened?
Well, talks broke down rather unexpectedly over the weekend. Both sides we were expecting both sides to make an announcement on a deal in principle over the terms of this merger, which they have been negotiating for months, mid this week. Well, they couldn't really agree on several points, the main ones being the amount of layoffs at Monte Paschi, and also the size of the capital injection that the Italian government should have made into Monte Paschi to allow UniCredit to buy it, to make it palatable really and capital neutral for UniCredit. Right. It's a big problem. Sorry. For the government of Mario Draghi, it's a big test because the failed sale really leave a few options to comply with European rules that require a sale by the end of 2021.
Luca, thanks so much for staying on top of this story for us. That's Bloomberg's Luca Casraghi there. Also, now to Turkey, where Turkey's President Erdogan signaling today that he would de-escalate a diplomatic spat that took a blow to the lira, taking it to record lows. Let's get more now from Bloomberg's Turkey Bureau Chief Onur Ant in Istanbul. So, Onur, we're hearing from a spokesman that Turkey appreciates diplomats who follow the rules. Is that fair to characterize this as a softening rhetoric? Certainly the lira taking it so.
Yeah, it surely is a sign of a softening rhetoric. And as you said, the lira is rallying from record lows against the dollar that it had seen earlier today. Now, as a little refresher, on Saturday, Erdogan said he ordered the foreign minister to declare 10 envoys from key Western partners, including the US and Germany, be declared persona non grata because they had issued a joint statement demanding the release of a Turkish businessman and philanthropist, Osman Kavala, from prison. Of course, the lira reacted very badly to the news, and it weakened to record lows against the US dollar on earlier Monday, after which Turkish officials were scrambling to talk Erdogan out of his decision. Following that, what happened was the U.S. embassy, along with other embassies, put out a statement that they said they were complying with international convention regulating diplomats' activities. The specific article that they were referring to says that diplomats cannot interfere in host countries' affairs. Now, Turks were quick to describe this as a step back by the American embassy, and later state media said that Erdogan was very pleased by the news. Now we're basically doing a full circle here. The lira is now back rallying, and Erdogan is expected to make a speech, a televised speech, following the cabinet presser in Ankara, and he's very likely to portray this whole thing as a diplomatic victory for Turkey.
It's so complicated. Really interesting. Onar, thank you very much. Bloomberg's Turkey Bureau Chief, thanks so much for staying late and joining us. And rounding it out here, German's IFO Institute Business Climate Survey showed that supply chain problems continue to weigh on Europe's largest economy. Clemens Fürst, IFO president, spoke to Bloomberg's Francine Lacroix earlier on the data.
These bottlenecks will not go away tomorrow. And the trouble is many companies have used their inventories, they have few reserves, and we see that capacity utilization is now going down. So the recovery is under pressure, and we will face a couple of difficult months, I would say, before things get better.
All right, let's bring in Alexander Weber, a Bloomberg European economy reporter in Frankfurt. We've known that these supply problems are really coming down, and I wonder if you can give us some perspective of sort of where we are in the cycle of the supply chain issues and then on the other end.
Yeah, so the IFO Business Confidence Index fell to a 6-month low, and this was just the latest sign of the mounting challenges for the German economy. Other indicators are pointing in exactly the same direction, and the growth forecasts for this year have already been slashed because these supply problems are just relentless. And it's just a particular problem for the German economy because of its strong focus on manufacturing. For example, the auto sector is really suffering from the shortages of semiconductors. And on top of that, you also have a slowdown in services, which is to some extent to be expected, but it also points to some concern over the pandemic. All of this means that the German economy probably will reach its pre-pandemic level only next year, and not in the summer, as some had already expected. Now, on the flip side, these forecasts now foresee higher growth next year, because you still have full order books at companies and households have a lot of excess savings. But as we've seen, it's really difficult to predict how long these supply chain problems will really last.
It certainly is. Alex, thanks so much. That's Bloomberg's Alex Weber. Now, coming up, we're going to be talking about private equity, and it could have been a U.S. IPO in the near future with the largest bottling company in the States for Fresco. But that's not all for PAI Partners, who has 17.4 billion euros under management. We're going to hear from Frédéric Stevian, one of the 3 managing partners at PAI next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Let's check in on the Bloomberg First Word News now. I'm John Hyland. U.S. labor shortages will persist into 2022 and contribute to a permanent increase in business costs. That's according to the latest survey by the National Association of Business Economics. Some 36% of respondents currently experiencing worker shortages said that they expect them to end at some point next year. None see it happening before the end of 2021. 14% see shortages abating in 2023 or later. And repair work on a natural gas pipeline belonging to the Russian energy giant Gazprom resulted in a powerful greenhouse gas release in October. That coincides with a large methane plume that was detected by a satellite. It had an estimated emissions rate of 164 tons of methane an hour, according to an analysis. If the discharge lasted an hour at that rate, it would have had the same short-term climate impact as the annual emissions of about 8,000 cars in the UK. And American investors continue to pour money into the private equity industry. Bloomberg has learned Advent International is the latest private equity giant to consider tapping a buoyant fundraising market for a record buyout fund. The company is reportedly targeting about $25 billion for a new flagship vehicle and could begin seeking commitments next year. Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm John Hyland. This is Bloomberg. Danny?
John, thanks so much. All right, let's dig into the private equity story more. I'm pleased to say joining us now is Frédéric Stévenant, one of the three managing partners at PAI. It's one of the largest buyout firms in Europe with 17.4 billion euros under management. Frédéric, thanks so much for joining us today. So John there was just mentioning this huge fund that Advent might be rising, $25 billion. I know that might be a ways off of PAI. Your last fund in 2018 you raised was 5 billion euros. However, I'm curious if in this new environment you need to start raising bigger funds in order to be relevant. Is that where we find ourselves in private equity now?
I mean, it's a very fair question. I think the reality is the size of fund is obviously important, but more important is your focus in terms of sector or in terms of specific strategy you follow, and to have an adequation between the size of your fund and that particular strategy. I think the strategy has diversified over time. There's more and more variance in terms of nature of what you invest in. So I think in reality, today what we're seeing is just a natural expansion of the field in which probably we operate, and therefore a natural extension in the size of the funds we raise.
Okay, interesting. So if it has to be what you're buying, how you're diversifying, is there a danger then that with these huge funds that we're starting to see, of course, Blackstone potentially raising a $30 billion fund, that money needs to be deployed? There's pressure now, and it's perhaps not being put forward with the best strategy.
I think that the names you are quoting are very solid operators. I think in the end, they raise the capital they think they can deploy successfully over the next couple of years. Returns in our industry haven't dropped in the last couple of quarters. So at this stage, we're still seeing very solid performance being delivered on the fund we invest. I think over time we may see some drop, but I personally think, again, diversification in terms of nature of what we invest in could be another source of performance. And in the end, the private equity is really judged on delivering outperformance versus public equity. I think the industry is delivering that today, and in my mind will continue to deliver that in the future.
So, Frédéric, it's Alex in New York. If we get to some of those deals, you have a lot of exposure to the consumer, and I'm wondering how you see that playing out. Not only do we have sort of wage pressures, we have supply chain issues, but also, as the German IFO data said, we have sentiment kind of rolling over here. Where do you think the opportunity is there?
I think that it's, again, very good question, Alex. I think the point in the supply chain disruption is probably short term. It has a longer term impact on inflation. If you look at consumer goods, if you're selling branded consumer goods, your ability to push those prices back to the consumer is very strong. Historically,
high period of inflation have been good for brands, as you've seen in historical financial performance. So we think, to some extent, an inflationary trend on all those B2C business that we own is pretty positive. You still need to understand the impact of supply chain disruption, which could be pretty sizable. Again, your consumer expect to see the product on the shelf. And already today, in particular in the UK, but to some extent in the US, you see some empty shelf, which in the end is a problem and has, to some extent, an impact on the consumer. So from our perspective, what we really focus on, whether in ice cream, whether in juices, etc., is to continue to be able to deliver these very strong brands to our consumer and for them to be able to enjoy them.
Yeah, Frederic, I definitely see that here in the UK. I can go to grocery stores and often find those empty shelves. What is the successful strategy then of companies, of these brand names, that you're able to get them on the shelves? What is the advice you're giving to your portfolio companies to navigate the current supply chain issues?
Well, I mean, again, what we're saying is be careful. So all the consumer goods company have followed reduction in working capital project for the last couple of years. This is not the time to have low inventory. Obviously, you need to manage that carefully, but fundamentally, we've told them to invest in their inventory to protect, to some extent, their ability to serve. We still have a very low level of service, which is not acceptable on a long-term basis, but the retailers understand it because they can see a lot of products are not being delivered on time onto their stores. So fundamentally, I would say it's a lot of good sense. It's just making sure that you protect your business by investing somewhat into inventory management, which is not exactly what people have done for the last 15 years.
What kind of deals look good to you right now? I mean, back in August, you paid about a little over $3 billion to buy Tropicana, Naked, and other juice brands from PepsiCo. What looks good right now?
Well, fundamentally, what looks good as an investor is growth. I mean, we invest in growth. We look for companies where we can see brand strength, but what we could see, again, with a different ownership, different focus, you can deliver fundamental growth into these assets. We've done it very successfully in yogurt with Yoplait in the past. We're doing it in ice cream, and we think the recent acquisition will deliver the same. It's all about delivering growth, getting consumer understanding and adjusting to the consumer demand of product. And there are many, many good ideas. The good news about consumer is we all love to taste this product. We think about enjoyment. Yes, health is important, but enjoyment is very important too. And as you mix health and enjoyment, you can really deliver a top-line opportunity, and that's what we're interested in. And that's what we've delivered over the last 15 years.
So, Frederic, if that's the deal side, if that's what you're looking at buying, how does the exit environment look right now? What's the most attractive method, the most attractive route of exiting companies at this point?
Well, it's both, I guess, IPO or strategic sales. Clearly, strategic sales depends on the assets you own. Some of our assets have very clear strategic exit routes, and we will follow those. Others, you will go to the equity markets to find liquidity, and obviously size is important. Even though, to go back to your point about size of funds, when you raise a $20 billion fund today, that means you can underwrite $3, $4, $5 billion equity tickets. So the size is less of a problem than it was, let's say, 2 years ago.
Last question, macro here from me. Frederic, if we are in a world of rising rates, whether that's the market pushing rates higher or eventually central banks acting in some capacity, does that change your framework? What do you do in that environment?
It does change your framework because to some extent, a lot of the easy financing will go away because liquidity will readjust to other type of investments. Today, because there is very, very little yield being delivered in the world, obviously people are interested in leveraged loans. You've seen a huge growth in it, but whether public or private loans. And therefore, if interest rate goes up, you will see some of that money being diverted to other type of yielding investments. We think at this stage, this is likely to be a low increase, and therefore we're not thinking this will change the model dramatically. But we still monitor that number very carefully to make sure that we have an adequation between the liquidity in the market and the product that we propose, and therefore the pricing of that product.
Frederic, it's been really great to have you on. I'm afraid that's all we have time for. Thanks so much for joining us. That's Frederic Stévenant of PAI Partners. This is Bloomberg.
from New York City.
We're in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
You talk about hiring aggressively at the moment. Can you walk me through how challenging that is at the moment? How difficult is it to find the right people?
Well, things have changed. Again, the world has changed under the pandemic, and you all know worldwide, what the challenges with getting people back into the workforce.
This virus is here to stay for quite a bit because it has been spread all over the world and has this ability to create mutations and variants.
Time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. I'm John Hyland. A big move for rental car company Hertz, which is barely 4 months out of bankruptcy. Hertz has placed an order for 100,000 Teslas. It's the first step of an ambitious plan to electrify its rental car fleet. It is the single largest purchase ever for electric vehicles and amounts to about $4.2 billion of revenue for Tesla. And Volvo is slashing its initial public offering by a fifth. The automaker is the latest in a string of European companies to pull back from equity markets roiled by soaring energy costs and persistent supply chain delays. Volvo is now selling shares to raise about $2.3 billion. Volvo Cars seeks to sell only fully electric vehicles by the end of the decade. And UBS is in talks about ending the standalone status of a key unit that deals with some of its richest clients. Bloomberg has learned the Swiss company is weighing the move because of an internal wrangling about how profits are shared between the wealth management and investment banking businesses. Sources tell Bloomberg the global family office is at the heart of talks. And that's the latest Bloomberg Business Flash. Alex, Danny.
All right, thanks so much, John. So, and you did see sort of UBS rally into the close here as we're rounding out the European trading session. It feels like this is very much an Iqbal Khan kind of transformation there. He is one of the co-heads of the unit, and he's not very happy with the way things are being done.
Right, and you have a lot of sway when it comes to all things wealth management because, of course, on Wall Street in Europe, this has really been one of the profit-generating parts of the business. When you have loan growth that doesn't look good, when you have net interest income, which is paltry as well, it really is the rich clients who are still taking out loans and are still giving the banks profit. So it makes sense that if you're going to restructure, if you're going to focus on an area, that this would be it.
Yeah, that's such a great point. And even like trading revenue, well, how long is that really going to last for if volatility winds up coming down just a touch? And remember that you have, the CEO, Ralph Hammers, has been there for what? For how long? A year, maybe? So this is all still part of his restructuring everything as well. All right, well, earnings coming out this week. European close is up next. It's a busy earnings week for banks. We're kicking off on the front foot. You have Euro stocks up by just about not even 0.7%. Pretty flat on the day. This is Bloomberg.
technology. How should we be looking at big banks and technology?
Technology is our friend. So it's helping us transform the bank fundamentally. And in fact, we're speaking, I think, as we speak, to our shareholders around what we've done and how we've transformed the bank. We also see technology and technology companies as partners. So some
not
of our
rivals.
You know, we know that there are big parts of what have been our business historically that will be absorbed into convenience platforms. And by convenience platforms, whether that's Amazon or Facebook or Alibaba or Tencent or something like that, those are platforms that are just very convenient for people to conduct their day-to-day financial affairs. And it'd be very difficult for a bank to compete with that. Now, in some cases, I'd say, let's say in Africa, we are setting up a competing platform to the convenience platforms. And we're working with technology companies and mobile telephony companies and others to create a platform of our own. But for the most part, we're going to be playing on somebody else's platform.
Watch Bloomberg Surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
you look
drop
great.
The bow tie. Drop the bow tie.
What, skinny tie?
Yeah. I always say, this is my line, whenever anyone in America has a go at me about a skinny tie, the older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
Google is saying it has accelerated innovation in the country and it's planning to appeal the FTC's decision. What's your take on this and how do you plan for further scrutinies?
We are going to see what they make and like what changes they are actually bring to this market.
Well, stocks just finishing the day up here in European trading. It is a mixed day. A lot of dispersion in these markets today, whether you look at industry groups or individual countries. I map markets go up on the terminal for you to see how we're rounding out the day. Now, one of the best performing regions today is the DAX, the German benchmark, up about 0.5% here to finish the day. A lot of that has to do with outperformance of autos. We'll get into that in a little bit. But some of the underperformers here, we're looking at a CAC 40 down 0.1%. Some of the banking story is helping out. You have Italian banks leading gains in Italy. That's up 0.9%, as well as oil companies, any of those gas-related companies. Because we continue to see those prices rise, we're seeing a UK index of FTSE 100 that's up 0.3%. So that's how your picture looks when it comes to individual countries. Let's look at the overall benchmark index. Because some of these areas we had some stronger gains, that meant on an overall level you saw a gain of just 0.1% when it came to the benchmark index. But just looking at the index today, you can see how volatile the day's trading was. Yes, the range was small, but we really went back and forth between losses and gains all day. But you can see just heading in to the end of the day, we were able to end further in the green. So late end of day buying here to round up a very busy day when it comes to earnings here in Europe. Of course, more are on deck as we have some of those inflationary pressures really in the fore. The BOE may be pulling back the reins, allowing us to step once again into stocks. All right, let's check out what your sectors look like as well. This is GRR Go on your terminal. So at the top of the pile here, we have autos and auto parts. That's up 2.5%. Basic resources and energy doing well too. This is, again, as I mentioned, you have oil gaining higher today. You have natural gas also moving higher. It's a cold weather in the west. You have European supply shorter than expected. But at the bottom of the pile, you have a lot of these bond proxies. You have telecom, media, utilities, those taking the biggest hit, though most of them falling about 0.75%. So if these are some of your sectors, let's go ahead and look at the individual companies. So I mentioned autos. VW, one of the biggest gainers today. That's up 4.7%. A lot of this has to do with Tesla. So any car manufacturer that makes EVs, those were gaining today. We had that great scoop from Eric Schatzker that Hertz is buying 100,000 Tesla models. But it's not just that. For the first time ever in Europe, we had monthly car sales where the #1 car was an electric vehicle. That was Tesla's Model 3. So because of that, we're seeing a lot of those type of companies rally today. Zooplus, this is an interesting one. This is a pets company because everybody's feeding the pandemic pooch. So you have two private equity companies, EQT, H&F. Both of them had a bidding war for Zooplus. However, they've decided they're going to work together, forming a joint venture in order to purchase Zooplus. But they're purchasing at €480. So we didn't see that big of a gain. One analyst called the price tag crazy on this. So you didn't have a lot of people stepping in to buy because it's unlikely to really go beyond that 480 per share price tag that the company's put on it. Finally, Alex, HSBC gaining more than 1.5%. We had their earnings today. They were able to announce a $2 billion buyback as well. So excitement there that more capital returns are coming. And overall, a better interest environment is what we saw flagged on that HSBC call, Alex.
Yeah, great roundup. Also, did you read the article in the FT that there's like a pet leave now? That if you get a pet, some companies are giving you a day off? I mean, talk about
paternity leave.
Paternity, yes, I didn't know that was a thing. All right, let's get HSBC. Stay on that for a second. The bank CFO spoke to Bloomberg earlier on why its announcement of a higher than expected share buyback is significant.
A dividend for the final full year results. In between time, we looked at our capital base. Our core tier 1 ratio is 15.9%. We want to get back to being in our target range of 14 to 14.5 over the next year or so. And so today's $2 billion buyback is an important step, I think, and it shows confidence that we have in the underlying performance of the business and outlook, and shows a commitment to try and normalize our capital base.
Now, the top line beat of $6 billion in part driven by the credit loss releases. Is this the top of credit loss releases?
Yeah, well, we've released about 70% now of the reserve build-up that we had in credit losses last year that we built up in the context of the onset of COVID. We still retain about $1.2 billion of reserve build-up. I think it will be much slower now, what we'll see coming out in the next 2 to 3 quarters.
You've also released information. You've got $19.6 billion exposure to property. Noel already made it clear that you're not too worried about direct links to real estate. What I want to know is what level of this $19.6 billion is red or orange or at danger if things get worse in the property market.
Well, none of that $19.6 billion is direct lending exposure to any Chinese property developer who is in the red category. So we're reasonably confident and comfortable with the credit exposure we've got to the Chinese real estate market at the moment. We've obviously just been through an exercise as a result of these results of looking at credit provisions in China. We are comfortable. We've managed to write back a significant amount of ECL reserves this quarter, and I think you should read into the buyback the fact that we are confident about where we're sitting at the moment in our risk positions.
Give me your perspective. Noel talked about the second and the third round impact on capital markets and bond markets. Ewan, given the ongoing Evergrande saga, do you think we're only beginning to see the impact on markets, or are we nearer the end?
Look, I think the Evergrande situation has been well telegraphed to the market for months now, so people have been able to adjust, take views. So I'm not saying never, but our view is that we're not going to see any material fallout as a result of this.
Do you think the Hong Kong Hong Kong is a critical market for you. Is the Hong Kong property market insulated? Do you get a sense from what's happening with Evergrande?
Well, Hong Kong, as you say, it's a third of the group's profits. It's our most important market. I think that the Hong Kong real estate market has proved to be resilient through many, many cycles. There is effectively a shortage of good quality property in Hong Kong, and our exposure to the Hong Kong property market is significant, but our coverage ratios are high, and we don't see any particular spillover impact at the moment into Hong Kong.
That was HSBC CFO Ewan Stevenson there speaking to Bloomberg. Alex, there were a lot of really interesting bits in that interview, his bullishness on China, but I thought one of the more fascinating conversations that Manus and Ewan had was his bullishness on UK's ability to raise rates. He said that, yes, the UK economy can handle 1 rate rise, it can handle 2 rate rise. We're at a turning point when it comes to rates. They're going to move higher from here. So it is interesting to hear more and more people saying, okay, it is time. It is time to get on with it. It is time to raise rates.
I mean, interesting that obviously part of it's going to be talking his book, because if you wind up having a steeper curve, that's going to be obviously good for banks. The other side, though, is I just wonder in the short term, though, what that does to, say, their loan book, and that you have those higher energy costs as well. Housing prices are bananas, and then you have a rate rise at the same time where you have the pandemic insurance rolling off. I just wonder if there's going to be a lot more cloudiness than necessarily we have gleaned from, say, the conference call.
Yeah, that is such an excellent point, because at the same time, these banks are really starved for loan growth. They don't have it. If they all of a sudden are in a position to charge customers more, what does that mean for that trajectory?
Yeah, although, you know, that interest margin, well, when is the last time that really grew? That would be something for that to happen. And we have a really, really big bank earnings week. You can see that on the calendar there. UBS tomorrow, we're just learning that perhaps they might rejigger how they distribute profits from the wealth management unit. I'm obviously always interested in Deutsche Bank, rounding it out in the middle of the week, Danny.
Yeah, it would be really interesting to see UBS, Deutsche Bank. I really want to hear about wealth management. As you say, that Bloomberg scoop on that story, that they might indeed be changing their structure.
All right, well, let's stay with banks for a second. You had the good side with HSBC and then the bad with his Monte Paschi. Italian Prime Minister Mario Draghi is still working on alternative solutions for that struggling bank. Now, efforts to sell the troubled Tuscan lender to UniCredit fell apart. Joining us now for what's next is Georgi Gunchep, Bloomberg Intelligence European Banks Analyst. Georgi, literally, where does Monte Paschi go now? It's owned by the government. They have till the end of the year to offload it. Time is a ticking. How does this happen?
Yeah, so, hi, first of all. So probably the first step for Italy now would be to seek an extension from the EU on its deadline by which it has to exit its 64% stake in Monte Paschi. Now, I expect the EU will probably show a decent degree of flexibility, because ultimately they also want to see the story finally. Then UniCredit was, it was Italy's preferred Monte Paschi. We don't see another buyer emerging in the near term, which suggests that Italy will focus on a standalone turnaround instead. Monte Paschi's capital position is quite poor, so the first step for Italy would be to attempt to do a capital injection, the mechanics and feasibility of which are still highly uncertain.
Right. So if we could, if a capital injection, Georgi, sorry for interrupting you there, but I have to ask, if a capital injection is one potential route for them, could another potential route be cost cuts? Could we, for example, see them let more employees go?
Things are basically related, because with their current capital position, they so for them to cut costs,
all right.
Georgi, sorry, we're gonna have to terminate a little early there. The internet connection wasn't so great. Georgi Gunchep of Bloomberg Intelligence. But Danny, to your point, if they can't find a buyer, they're going to have to trim down in other ways. And what's going to be the stomach for Mario Draghi to go back to constituents and be like, hey, look at the job cuts that just happened? That's not going to look very good.
Yeah. And I mean, this is a really interesting question of what this means for Mario Draghi politically. He's been really at the fore here, leading the charge to try to find a buyer for Monte Paschi. So there could be political implications for this as well.
Yeah, do they trim down and then try again? I don't know. Time is ticking, like we mentioned. All right, we're going to get to our other top story just after this. You got the lira erasing some losses against the dollar. Turkey skirts an escalation of tensions with the West. We're going to break down what you do with this. Timothy Ash, Blue Bay Asset Management Senior EM Strategist, Sovereign Strategist, will be joining us next. This is Bloomberg.
população é uma população importante, é uma população que frequenta a escola também, né? Então é importante que eles também estejam protegidos para o coronavírus, evitando assim a transmissão.
Estava esperando muito por essa vacina. Desde o ano passado eu estava torcendo logo para poder minha vida logo voltar ao normal, que eu quero logo voltar para a escola, eu quero voltar a sair com meus amigos, eu quero sair, eu quero voltar à minha vida normal.
A dose foi toda administrada.
China is a gigantic part of our economic life and will be for a long time, for our lifetimes. But that does not mean that we should be naive in the way that we look at our critical national infrastructure, the way we look at, you mentioned nuclear power, you mentioned 5G technology. Those are all legitimate concerns that any government, many other governments around the world have. But I've said this many times, it's worth repeating. I am no Sinophobe, very far from it. Do
you think you're the last Sinophile in the cabinet?
No, I expect there are lots of... look, China is a great country and civilization.
What about wind power? Would you let them buy offshore wind power? That's infrastructure.
I think you'd have to
railways.
You'd have to look at what was you're defining as strategic or critical.
Countries, Francine, that are the equivalent, that equal 80% of all the emissions. Those 20 countries, above all, have to step up.
Let's check in on the Bloomberg First Word News now. I'm John Hyland. The Bank of England should wait before raising interest rates as inflationary pressures are likely to wane. That's according to a policymaker who said today that disruptions to global supply chains are likely to prove temporary, and acting too quickly could even, quote, have disinflationary impact on longer-term price pressures. And the military figure who heads Sudan's Sovereign Council says a new government will be formed hours after the prime minister and other officials were arrested in an apparent coup. The army leader declared emergency law across the country. The Sudan has worked to end its international isolation since mass demonstrations overthrew longtime dictator Omar al-Bashir in 2019. And in Turkey, President Recep Erdogan's administration is weighing options to avoid formally designating ambassadors from 10 countries, including the U.S. and Germany, persona non grata. Erdogan risked a major rift by describing them as no longer welcome, but Bloomberg has learned his senior advisors have warned Erdogan about the possible fallout that it could have on Turkey's economy and the lira. The spat flared after the ambassadors demanded the release of a prominent businessman and philanthropist. Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm John Hyland. This is Bloomberg. Alex?
All right, thanks so much, John. I appreciate that. Let's get more on the developments then in Turkey and bring in Timothy Ash, Blue Bay Asset Management Senior EM Sovereign Strategist. Tim, what have you made of the last 24 hours of news flow and price action over in Turkey?
Well, another crazy day in Turkey with Erdogan. I mean, we woke up this morning assuming that maybe the 10 ambassadors would be kicked out and there'd be a major rift between Turkey and its major Western partners. And then halfway through the afternoon, some kind of deal seems to have done. The ambassadors or the embassies of those countries anyway decided, I think, to issue a statement, or the Americans, I should say, issued a statement affirming they would abide by diplomatic norms, not interfering in other countries' affairs. Erdogan seemed to say, that's enough for me. He seems to have pulled out of it, and he's not going to kick them all out now. But incredible to even imagine, right, that a NATO ally, a NATO partner, could imagine kicking out, the US, France, Germany, all these are major trading partners. Around half of Turkey's foreign trade, investment, and financing comes from these countries, and kicking them out. I mean, it's such at a time where the Turkish economy anyway, and Turkish financial markets are under such pressure after some crazy moves by the Central Bank of Turkey last week, cutting rates 200 basis points.
I mean, do foreign investors, do you, Tim, do you want to play in this Turkish market at all? Are there any assets you would jump in and buy?
Look, long term, I think investors can see through all this, right? And I think they like the underlying Turkey story. They like Turkish banks, Turkish corporates. It's very hard to play the volatility around Erdogan at the moment, and the idiosyncratic and kind of crazy, there's no other way to describe it, pursuit of monetary policy. Inflation is at 20%, and they're cutting policy rates. Unsurprisingly, the lira is getting trashed. Each day it's another record low. Today we saw a range of 960 in the morning, 985, and then back to around 955 as speaking. But, if the central bank cannot increase interest rates with a confidence shock that Turkey's undergoing, it's very hard to see the currency not weakening further.
Well, to that point, I mean, and you raised it earlier, is that Turkey has a current account deficit. Like, they need the trading partners to finance their economy. That's the whole point. If they want to change their whole economic model and move away from that, how low does the lira have to go to do that?
Well, if you're not willing to raise rates to defend the currency, and unfortunately Turkey doesn't have a huge pad of foreign exchange reserves. In fact, its net international reserve position is significantly negative, maybe minus 50. So it has limited amount of armor to defend the currency. In the end, the market will go where the market wants it to go, and that means, where is the end in sight? It's very hard to see that. I mean, people want to see something, a change of confidence, right? I mean, something to turn the tide. All this anti-Western rhetoric again. These are the guys that fund Turkey, right? And if you're banging them all the time, they're going to lose confidence and leave the country. And that's what they've been doing in drones, actually, in the last decade, unfortunately.
Well, with that in mind, Tim, I mean, Turkey is a big player in the bond market. I think about $110 billion of hard currency bonds. And they, for the most part, have always been welcomed in the Euro bond market. But considering the most recent rhetoric, could that change?
Well, I think we were kind of on the cusp of it. I mean, as I said, investors generally have longer-term faith in the Turkish sovereign. Debt ratios are fairly moderate, public sector anyway. The companies and banks that have borrowed in the offshore market are generally blue chips, well-respected. They've paid investors back in the hard times, right? So there's that. People, I think, want to buy those kind of assets. But they find it very difficult to buy them when there's this big Erdogan risk factor that he can do something crazy in the background. And I think if he had thrown the 10 ambassadors out, it's kind of going down the Venezuela Chavez kind of scenario, in which case I think people will say anything's possible. You can even talk about capital controls. We don't want to be in any Turkish assets. So I think I think someone in government circles, Turkish government circles, I think read Erdogan the Riot Act, and they told him, they explained to him, if you do this, we cannot fund Turkey. We'll have a major macro and financial crisis. In the end, he kind of decided, well, maybe I'd like a way out of this crisis. So so that's kind of positive. But a strange.
I was going to say, Tim, isn't that quite significant that there's someone who can still talk truth to power when we kind of thought there maybe wasn't going to be that person anymore in Turkey?
Well, it's a shame that it has to go right to the edge. And unfortunately, on monetary policy, which is the number one problem in Turkey, monetary policy is screwed up totally, where Erdogan thinks interest rates cause inflation, so he's trying to fight inflation by cutting interest rates. I don't think anyone in the world, in terms of central bank policy circles, believes that. I don't even think Turkish central bankers believe it, but Erdogan does, so they have to do what he says. And that means, well, they all eventually get fired if they don't follow the script, right? And, I think the problem is, they need to hike rates, not cut rates. And I think we're a long way from being able to do that. The currency is probably going to have to soften a lot, even from where we are now, which is crazy levels for the currency. But until Erdogan, realizes that, again, he's taken, he's flown too close to the sun, ultimately he's going to burn and drop down to earth like us mere mortals.
Yeah, I mean, we already, as you say, that 20% inflation, that's enough to give any mortal a bit of a pause. Tim, so great to have you on with us this morning. Really great to get your thoughts. That's Timothy Ash, Blue Bay Asset Management, Senior EM Sovereign Strategist. This is Bloomberg.
Engine number one was able to do on the Exxon fight. It opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that is either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year.
Yeah.
And so our approach is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
Our supply chain team, they became unsung heroes of our pandemic timeframe, where they just came forward with all kinds of creative workarounds, risk management, diversifying our supply chain.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Let's now take a look at some of the biggest U.S. movers. Bloomberg's Kriti Gupta has the name. And Kriti, you got some autos there for us, I gather.
Absolutely, Danny. Green on the screen for the green companies. Let's start off with Tesla here. Doing two great things here at the beginning. A price target upgrade to $1,200 by Adam Jonas over at Morgan Stanley. And then on top of that, a Bloomberg scoop by our very own Eric Schatzker, a 100,000 car order from Hertz, really renewing their new fleet. And then you see Bloom Energy partnering with SK Group in a $4.5 billion equipment and services deal. I want to hit the commodities quickly because they are gaining pretty fast and furious. They're dealing with a lot of those stocks. And on top of that, you see some of the supply chain issues translating to Kimberly-Clark. I want to end with Facebook shares. Those are down, of course, as they start to deal with those whistleblower concerns and report earnings after the bell. Alex?
Cannot wait to see those numbers. Kriti, thanks a lot. Bloomberg's Kriti Gupta joining us there. It's not just Facebook. Lots of other stuff happening in the next 24 hours. You got President Biden delivering remarks in New Jersey Transit Meadowlands Maintenance Complex to sell his economic agenda. And Danny, Facebook after the bell. I'm into the numbers, but I'm much more interested in the conference call.
Yes, that commentary from the company will be so fascinating on the Facebook papers. Tomorrow, Alex, we do await more tech. We have Apple, we have Microsoft, we have Twitter. We also have European bank earnings. We have UBS. That will be really fascinating to see with the most recent Bloomberg reporting about a possible change in structure to their family offices. An FDA panel meeting about vaccinations for younger kids, Alex.
Oh, so on my radar. Okay, that wraps it up for me and Danny. Coming up, we got Richard Haas, Council on Foreign Relations President, joins Balance of Power with David Weston. And I'll be going over to radio. Tune on in to Bloomberg DAB Digital Radio. This is Bloomberg.
something wrong with her eye. And when I had a look, it looked like she was blind. The vet that she's registered with were only doing telephone appointments, which was a bit pointless because she really needed to be seen by someone. And I couldn't get one anyway for like another week. I was just quite worried about, you know, the complications of leaving it for so long.
We've seen millions more animals becoming pets in the past year due to the people having increased time at home. What we're also finding is due to Brexit that we're having decreased numbers of European vets working over here. So unfortunately, we're unable to meet that current demand for pet services. Also, COVID's got the inevitable impact with people having to self-isolate.
It is very limited what we can diagnose, so it's more about peace of mind and determining whether they do need to be seen in person.
The growth story in cannabis remains very strong even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From the world of politics.
This is absolutely essential if this administration is going to have any credibility.
To the world of business.
It's going to take a while for banking to make this transition to crypto.
This is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, welcome to Balance of Power. We're going to start today with China. The complicated U.S.-China relationship under President Trump has only gotten more difficult under President Biden, as China has taken an increasingly aggressive stance toward Taiwan. And President Biden has stepped into what has been a very nuanced U.S. policy toward China and Taiwan. To take us through that policy and how to manage it, welcome now Ambassador Richard Haass. He's president of the Council on Foreign Relations and author, among other books, of The World, a brief introduction, a bestseller, I must say. So, Richard, thanks so much for being with us. Take us through what, as I understand, is sort of a strategic ambiguity that we have, going back to, I believe, when Henry Kissinger negotiated with Zhou Enlai about exactly what our position on Taiwan is. What is U.S. policy toward Taiwan?
Got a few hours, David? You're right. It goes back to the founding of the modern relationship between China and the United States. What we shared in the 70s was animosity towards the Soviet Union. And the whole idea was to bring together the United States and China. But the biggest stumbling block was Taiwan. And essentially what the United States and the People's Republic of China did was to agree to disagree. And rather than resolve the issue, they essentially parked it. And the whole idea was it was not to be resolved. Essentially, Taiwan's status, what's formerly the Republic of China, was not to be resolved coercively. And so for 4 decades, the United States has tried to keep everybody a little bit off balance, telling China, the mainland, you cannot assume we would not use military force to help Taiwan if you were to attack it. And at the same time, we've told Taiwan, you cannot assume we will use force. And the purpose of this latter ambiguity was to dissuade Taiwan from doing something provocative, like declaring its independence. And this worked pretty well for more than 4 decades, but it's wearing mighty thin now. And the principal reason is that this China of Xi Jinping seems to be growing impatient. It's talking more and somewhat more aggressively about bringing Taiwan into to what they would call rejuvenating China, which is that's their wording for bringing Taiwan in. And then you also have China dramatically increasing its military capability. So you have much more pressure in the last couple of weeks. We've seen all sorts of incursions in what's called Taiwan's air defense zone, the identification zone. Chinese fighter jets have gone in there. So this issue, which was on the back burner for years, has suddenly, David, emerged on the front burner. And the question for the United States is, what do we do to discourage or deter a Chinese attack on Taiwan? What happens if one has all the same? Should we be prepared to go to Taiwan's defense? Should we revisit this ambiguity? Should we now basically tell the mainland, hey, if you attack Taiwan, you should know that we will go to Taiwan's aid? Now, this doesn't change the basics of the policy. We still say, as we did 4 decades ago, as Henry Kissinger told Zhou Enlai and Mao, that there's only one China. But what we want to do is make sure that any issue of final status is resolved peacefully. And what's at stake here is politically, we have all sorts of commitments to Taiwan, not a NATO-like commitment, but we have commitments. Countries like Japan and others would worry, and then some, if the United States did not stand by Taiwan. You've got a democracy of 23 million people, and as your listeners know, as your viewers know, Taiwan is the world's most important producer of advanced microchips. So there's a lot at stake here.
So Richard, let me ask it this way, because among other books you've written was one about wars of necessity and wars of choice. If in fact China did move on Taiwan and we actually went into armed conflict with China, from the United States' point of view, is that a war of necessity or of choice? Do we need to defend Taiwan?
It's a great question, David. I would say it's a war of choice, but I would say that we have significant interest there. And I would say that the interests warrant it. Could the United States survive if China were to take Taiwan forcibly? Yes. Would it totally disrupt our alliance system in Asia? Yes. Are there other tools we could use to try to deter China? Yes. We should, for example, now be working with the Europeans and our Asian partners, to say if China ever were to use force against Taiwan, here's the price it would pay economically. Essentially, what we want to do is persuade Xi Jinping that any benefits politically that would accrue to him from gaining Taiwan would be more than offset by the economic and military price he'd pay, and that indeed the military and economic price would be so high that it would threaten his rule and that of the Communist Party. So that's what deterrence is all about, and that means signaling will on our part and having capability. But do I think that there are significant or potentially even vital U.S. interests at stake? Yes, but I still think it would be a war of choice. But I would argue it would be a smart choice to do it, and an unwise choice not to.
Finally, Richard, this is Bloomberg, so we pay attention a lot to the economics of the situation. It appears that China growth is slowing. There's a debate about how much it's slowing, how quickly it's slowing. How does that inform, if at all, President Xi's assessment of things like Taiwan and other aspects of the U.S.-Chinese relationship?
No, Chinese growth, as you say, David, is clearly glowing. The most recent numbers are below 5%. They've got all sorts of financial issues, in addition to demographic and environmental and health issues. There's a significant school of thought that's worried about this. I don't speak Mandarin, and I don't know how to say wag the dog in Mandarin, but there is concern that Xi Jinping, if pressured at home and no longer able to point to double-digit economic growth as the legitimizer of his rule, particularly as he tries to get a third term and break out of any term limits, that he might be tempted at some point to turn to foreign policy, to turn to the Taiwan issue as a way of building domestic support at a time that China is becoming increasingly nationalist. So there may very well be a connection or a correlation to lower levels of economic performance and a more assertive China in terms of foreign policy. It wouldn't be the first government that turned to nationalism in foreign policy in order to compensate for what's going on at home. You just ran a piece about Turkey. As the Turkish currency falls, as the economy falls, it's interesting. What is Mr. Erdogan doing? He's turning to foreign policy, threatening to oust 10 ambassadors. Again, there's a pattern here.
It's fascinating. What do you make of what President Erdogan is doing? Is that a form of wag the dog? Is that why he's seizing on this issue with these 10 ambassadors and this imprisoned, I guess really it's fair to say, do-gooder, a wealthy businessman who is also a philanthropist?
100%. This is someone who has mismanaged the Turkish economy. He has jailed hundreds and hundreds of journalists over the years. He's an autocrat. Turkey's meant to be a democracy, but it's not. And so this pressure now, when foreign ambassadors call for the release from prison of a political dissident, similar to something like Russia, when people call for the release of Mr. Navalny on Putin. And what you have are people turning to foreign policy again to distract attention. And that's what Erdogan's move is all about.
One final one on a big subject, but it's going to be coming up. COP26. Do you expect anything major to come out of Glasgow?
Whatever comes out of Glasgow is not going to be what needs to come out of Glasgow. And to me, David, the only question is how far short does the world fall? We're simply not on a trajectory that is what is needed to slow the increase in the average temperature of the atmosphere and the oceans. My guess is there'll be some all sorts of pledges at Glasgow. Pledges are not the same thing as actions. They have to be implemented. But my concern is even if they were to be implemented, they would still be inadequate. And that's the problem of Glasgow.
Richard, always wonderful to have you with us. Thank you so much for the time. That's Council of Foreign Relations President Richard Haas. Coming up, getting to a deal, President Biden's Build Back Better plan with our political contributors Jeannie Zaino of Iona College and Rick Davis of Stone Court Capital. This is Balance of Power on Bloomberg Television and Radio.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
The energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic and there are a handful of things going on. I think all over the world there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely. But I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. President Biden is sounding an optimistic tone after a weekend meeting with Senate Majority Leader Chuck Schumer and West Virginia Democratic Senator Joe Manchin. They're trying to reach agreement on a scaled-back version of Mr. Biden's economic agenda. The president spoke to reporters in Newcastle, Delaware this morning. The president is...
Do you think you'll have a plan before Wednesday?
With the grace of God and the goodwill of neighbors.
Do you want to plan a deal by the time you leave for COP? Is that something you've expressed to Democrats?
That's my hope.
The president is hoping to have an agreement set in stone before he heads to a UN climate change conference in Glasgow, Scotland later this week. Today he'll be in New Jersey discussing his economic agenda and giving a boost to Governor Phil Murphy ahead of next week's election. U.S. labor shortages will persist into 2022 and contribute to a permanent increase in business costs. That's according to a new survey by the National Association of Business Economics. Some 36% of respondents currently experiencing worker shortages said they expect them to end at some point next year. None see it happening before the end of 2021, and 14% see shortages abating in 2023 or later. Microsoft says the hackers behind the SolarWinds cyber attack are engaged in a fresh campaign to compromise global networks by targeting the tech supply chain. Microsoft attributes the attack to a group called Nobelium. Microsoft says more than 140 tech service providers and resellers have been notified as targets. This is happening despite U.S. sanctions put in place last April. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much, Mark. As Mark just reported, President Biden is in New Jersey today talking about his budget package. Welcome now, Washington correspondent Joe Matthew. He's host of Sound On. You can hear that every afternoon at 5 p.m. Eastern Time on Bloomberg Radio. So, Joe, thanks so much. So we had this meeting over the weekend with Joe Manchin. We haven't heard anything from Joe Manchin since then. We did hear from Nancy Pelosi, Speaker of the House, saying she thinks it's looking pretty good. What do we read into all that, if anything?
Yeah, it's a lot of good questions there, David, as we try to read the tea leaves here. To Mark Crumpton's point, the president has not returned to the White House yet. He'll be back here this afternoon after swinging through New Jersey, where he's still trying to make the sales pitch for his economic agenda. And indeed, it was a bit of a working weekend. He sat down at his home in Wilmington, not only with Senator Joe Manchin, but with Senate Majority Leader Chuck Schumer to try to hammer out some of the final sticking points. There have been no specifics from this White House. Deputy Press Secretary Karine Jean-Pierre only saying to reporters this morning that progress was made. There was progress in the meeting. We just don't know exactly how to quantify it. Speaker Nancy Pelosi told CNN over the weekend they're 90% there. And of course, we've heard that before, too, because, David, Democrats agree on a lot here. It's that final 10% that remains the hard part. And that's what they're trying to get to now, not just a top line number. And again, it's been reported that Joe Manchin is somewhere near $1.75 trillion. But pay less attention to that. Look at what's inside here. They have not figured out exactly what the scale of a Medicare expansion should be. Never mind the top line figures here. They haven't figured out the duration of what a child tax credit should be. And then there's the whole tax component, how to pay for it. Last time we spoke, David, the idea was a billionaire's tax instead of a corporate tax hike. These are big changes at the 11th hour. And indeed, President Biden is hoping to have something to show for his work toward the end of this week. As October draws to a close, he's going to not only COP26, but we've got a Virginia gubernatorial election that he's hoping to have something good to show for all of this here in just the next couple of days, David. So the clock is ticking, and the president still on the road on his way back here today.
So, Joe, that was so well put, but let me take you exactly to that last point. What does he need as he goes to COP26 and perhaps for the gubernatorial race in Virginia as well? Does he need a vote on the bipartisan infrastructure bill? Does he need an actual vote on that? Can he get by with just a framework where people say, yes, we agree with it, even though they haven't voted on the rest of it, the Build Back Better?
Here's how I'll answer that. October 31st is an important deadline, not because Nancy Pelosi made that self-imposed deadline to get it all done, but because surface transportation funding runs out. That's why they need to pass the BIF, as they call it, that bipartisan infrastructure deal. But, David, they can't do that unless there's not only a framework, we like to throw that word around, but real trust between moderates and progressives on what that reconciliation plan will look like. To get that done before the end of this week is going to mean a remarkably productive couple of days here in Washington.
Okay, thank you so much. Great to have you with us always. That's Sound On host Joe Matthew. You can hear him, as I said, every single day at 5 p.m. Eastern Time on Bloomberg Radio. However it all comes out, President Biden does have a tough problem on his hands this week. And when we talk about tough issues in Washington, we always turn to our political contributors, Jeannie Shanzano of Iona College and Rick Davis of Stone Court Capital. Great to have the group back together again. Rick, let me start with you. What kind of pinky swear do they have to have among the progressives and the moderates in the Democratic Party to get this thing at least far enough along?
Yeah, I think that they've got to have some kind of top line number agreement, whether it's the $1.75 trillion that Joe Matthew just mentioned that Manchin's pushing or something a little more than that the progressives want. I think that will allow them to then move forward with the infrastructure bill, the BIF, as it's called, to give a actual tangible win to President Biden before he leaves to go to Scotland.
So a tangible win, Jeannie, is it going to look like a win to voters? I mean, one of the questions here is, having put the $3.5 trillion out there, if they come back at 1.5 or 1.75, can the Republicans say, look, you didn't get very much done?
They can. And I think this is where the real challenge is for the administration, not just obviously these tough negotiations that you're just talking about, but doing what the president is doing today, which is selling it to the American public. Not only is the bill a lot smaller than they originally promised, but they need to stop talking only about the top line number and talk about how transformative this will be. And that needs to be not just, looking forward, but at the moment. Americans are, filling their cars with gas that's a lot more expensive. They're going to grocery stores. They're shopping. They're worried about getting Christmas gifts. They need to know how this passage, these massive spending bills, are going to help them now, not just in the future. And that is a huge uphill battle for this administration and part of what the president's trying to do today.
So Rick, Jeannie, I think raises a really good point. I'm not sure how many ordinary Americans out there know what difference it would make to them in their lives day in and day out. Is that important at this point, or is that something that can come along after you actually have enacted the statutes to go out and sell it?
Yeah, to some degree, you have to do a little bit of selling to get momentum, to get the passage. And you've seen the new advertising that the White House has been promoting. And that's been helpful, probably, especially to some of these members that need shoring up. But the reality is, other than us, your dedicated viewers, and a few other insiders, nobody's really paying that much attention to making the sausage here. Once this is done, there'll be a big celebration at the White House. They'll sign these bills into law, and that's when the real promotion will begin. That's when the American public will start looking in our direction here in Washington and saying, what have you done? How much is that going to cost me? How much am I going to get out of this? How's it going to affect my family? And you have basically a year run up to sell this package before the midterms. And Democrats have to be confident that this will help them in the midterms, which is why I think you'll ultimately get a deal. And
yet, Jeannie, we won't be out of the woods yet. As I recall, don't we have to have some more appropriations for the government to keep it open? And oh, by the way, that debt ceiling that's coming up in about 3 or 4 weeks?
Surface transportation that you and Joe were just talking about, the debt ceiling. Let's not forget about these 2 gubernatorial races, the presidents in New Jersey. That should be a definite win for Democrats. And yet we're seeing the Democratic incumbent New Jersey governor just 6 points ahead at this point. That's too close for comfort. So while I agree with Rick, they want to do this before the midterm and get out to sell, it is going to be a problem for them if they lose one or both of these gubernatorial races. And again, I think they have to make the case to the American public now, not just that this is going to help them in the future and it's transformative, that it's going to help them in the immediate present. People are worried about inflation. They're worried about the pandemic. The president needs to be addressing those. That's what he promised to do.
So Rick, let's go to that Virginia gubernatorial race. I mean, you're our resident Virginia expert, I think. Are we going to have, would it be an upset, actually, if in fact the Carlisle executive pulled this out and beat Terry McAuliffe?
Yeah, the Republican candidate Youngkin is neck and neck. This is a very close race. Look, I mean, Virginia is much more of a purple state than it is a blue state. People have gotten a little bit carried away with the Democratic Party's victories in Virginia over the last few cycles, and they've gotten a little comfortable with the idea that they can replicate those. There's still a large Republican vote who are going to come out in Election Day and potentially upset Terry McAuliffe, the previous governor, who has a lot of name ID and a lot of cachet. But the reality is running at a time when Joe Biden's numbers in Virginia have been plummeting, and he's tied to this administration whether he likes it or not. And so this is as much a referendum potentially on Joe Biden as it is on whether or not Republicans and Democrats can win in Virginia on their own. So it will have ramifications on this policy. Terry McAuliffe has made it clear that he wanted these deals done so that he could take advantage of them. It doesn't look like that's going to give him enough time. And so he's on his own, but it's going to be Biden who's either the winner or the loser.
So, Jeannie, maybe last word to you. you, I mean, you're in New York, not New Jersey, but it's pretty close as a practical matter. We thought, at least, that Phil Murphy really had this thing locked up. Now, that's not quite so clear. As you said, we're down to 6 points or so. Now, is there any chance that Mr. Chitterella could actually pull that out?
You know, David, I would say absolutely not. Look at the numbers. But in this environment, as we've seen going back to 2016, almost anything can happen. My guess is that Murphy pulls it out and he will win, you know, fairly comfortably. But again, the polls are way too close and too tight for comfort. That's why you see Obama. That's why you see Biden going in there to give Murphy a hand.
Well, and how much of it is a referendum, Jeannie, on President Biden rather than a local race?
It is a referendum on President Biden. He's had a tough time since the withdrawal from Afghanistan. He desperately needs a win at this point. That's not unique to Joe Biden. This is true in the modern presidency. When you have the president in power in these off-year elections, his party has some challenges, and that's what we're seeing in Virginia and New Jersey.
So Rick, if the Democrats lose one or both of those races, it certainly would be a loss for President Biden. If they win both of the Democrats, is that a win for President Biden?
Oh, sure. He'll do a victory lap and talk about how their agenda is still relevant to voters. And look, winning matters. So that'll be a good springboard into the midterms. But the reality is even a close race is going to be seen as weakness on his part. And I think both of these races have started closing in the last couple of weeks of the election. So we also see other indications of weakness on the Democratic caucus. A number of very high-profile House Democrats have chosen to retire this week, which is starting to convince people that it's not going to be a good cycle for Democrats in Congress. And so these things all start to pile up and become part of the storyline of whether or not Democrats are really up for a tough election cycle over the next 2 years.
Really great to have the two of you back again. That's our Bloomberg political contributors, Jeannie Sheehan Zaino and Rick Davis. You can hear more of them with Joe Matthew on Sound On. Once again, that's airing at 5 p.m. Eastern Time this afternoon. This is Balance of Power on Bloomberg Television and Radio.
So if someone wants a leader, is it better to find a general or an admiral?
That's like asking me to say, who do you love more, your son or your daughter?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Fauci and his team shared data about mixing vaccines. The vaccines can be mixed safely, and that's very good for people who got not Moderna vaccine, but want the Moderna vaccine for a booster because it's of a higher dose.
Here's some breaking news right now. Blue Origin and Sierra Space have just announced plans for an orbital reef. That's a commercially developed and operated space station to be built in low Earth orbit. Coming up, we're going to focus on Facebook. That's coming up on Balance of Power on Bloomberg Television and Radio.
nations need to end coal use by 2030. Developing nations need to follow suit by 2040. And we need coalitions of solidarity between countries that still depend heavily on coal and countries that have the financial and technical resources to support transitions, because it is essential that no more coal power plants are built.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Facebook is our stock of the hour, maybe day, maybe week, maybe month, as a result of the earnings coming out after the bell today. But let's be frank, every single day we get a new leak about something about Facebook that is not too attractive. Doesn't seem to be hitting the stock, though. And Dave Wilson's here to explain that story to us.
Well, I mean, we should point out that Facebook shares hit a record back in early September, so they have come off in the past month and a half or so. And also, they fell more than 5% on Friday in response to results out of Snap, the owner of Snapchat, that didn't go over so well. So it's not like, all these revelations that we're getting from Frances Haugen and the documents that, she took away from the company and then became a whistleblower on. I mean, they're getting noticed, you could argue, from the stock's performance, but it's been sort of more subtle perhaps over time, as opposed to, everything comes out today out of these 17 news organizations working together and people will respond all at once.
Yeah, at the same time, isn't the thing that drives the stock really how much money they're making off of advertising?
Well, absolutely. I mean, and that's true for social media companies overall. And Snap's results raised a couple of issues that Facebook is dealing with as well. One is that Apple, they changed their software. They required users to opt in if they want to be tracked by advertisers like Facebook. Facebook raised that issue with their second quarter results. No doubt it's going to come up again after the close when the third quarter figures are released. And the second point that Snap made, maybe one that wasn't really front and center before, was that, you have all these companies that they can't make enough stuff to fill the orders they have. Why would they advertise to go get more business? I mean, that's a bigger issue, ties into the supply chain concerns that a lot of companies have talked about. And we'll see whether that is also an influence on Facebook.
Fascinating. Well, we're going to know that this afternoon after the bell. Thank you so much to Dave Wilson for that report on Facebook. Well, however Wall Street evaluates Facebook's prospects, Washington lawmakers and regulators are taking a close look at curbing what they see as Facebook's excesses. We talked with former HP CEO Carly Fiorina on Wall Street Week this last Friday, and here's how she sees the problem.
There are clearly huge risks right now to Facebook shareholders. The board is kind of MIA. The dual class shares mean that Mark Zuckerberg holds enormous power. But the SEC is a regulatory agency that can demand fuller disclosure of risks, of algorithms on behalf of shareholders. And I think ultimately someone may take a shot at the board of Facebook.
For more on possible Facebook regulation, we welcome now law professor Kate Klonick of St. John's, who is writing a book on the subject of Facebook. So welcome, Professor. Great to have you with us. You heard Carly Fiorina there talking about one form of regulation, which would actually be securities in terms of disclosure to shareholders. Other people are talking about content regulation and goodness knows antitrust issues. Give us a sense of what approach might make sense.
Yeah, so there are just so many different groups that are having to kind of exercise what they're concerned about in the Facebook land of all of this. Like you've touched on a few, the shareholder prices and shareholders and holding a board accountable. In my world, mostly what I focus on is looking at whether or not users are happy with the service and how users are responding to the service and how it's being picked up and reported on in the media. But of course, these are all interrelated. And actually, I think that one of the main things that's probably hurting Facebook so much right now, and one of the things that I've written about, is that they have overestimated their metric of growth just purely in terms of user engagement. And without building in kind of a more holistic sense of how they are contributing to users' engagement with the world, users' engagement with each other, that without measuring that and just measuring it in very black and white binary, how much time is spent on the platform, where they're clicking, what they're seeing, you're just not getting a full sense of the health of the company. And you're not getting a sense of really where they're contributing harms or where they have an easy spot where they can fix them for users or for shareholders.
Yeah, well, really good point. If you just measure user engagement, that's what you get. Whatever you measure, you're managed to that phenomenon. But from a point of view of making money, do they want to measure the other things? Are they perfectly happy with user engagement and showing advertisers, boy, people are really engaged?
Yeah, well, I mean, I've come from a world of content moderation, which is basically looking at for the last 6 years and 7 years and really studying how it is that Facebook makes the rules that it enforces on its platform, how it does that, and how users basically interact with that, how individuals decide that there are harms, how we decide societally that there are harms through misinformation or things like that. I think that what you have at Facebook is that essentially means taking down or policing more content or putting a ton more into a certain cost center. And as long as they continue measuring for the last 7 to 10 years on a pure user engagement scale, then they're never going to be reflecting that. And so they're never going to be having to reflect basically when they stop measuring in that way. So if they're just always measuring on this number, it's one for them. And so they keep making that decision. What I and a lot of others have urged, not actually for shareholders at all, but for users who just really are using this as their main source of communication, especially through the pandemic. We've seen this huge rise in how people are communicating through these platforms, that these are governance issues, these are rights issues. And if they want long-term health for their company, they're going to have to do a better job governing their users, because otherwise they're going to lose users, as Bloomberg reported today.
One of the questions that occurred to me, actually, is whether Facebook regrets having asked some of the questions they got some unfortunate answers to and now have gotten leaked. If they never asked the question, there wouldn't have been these documents.
Oh, yeah. This is something that people who have been researching this for a long time see as the double-edged sword of a lot of these leaks. Who the heck is going to keep investing in internal monitoring or internal reviews if we are now in a culture in which all of these private companies leak this information all the time? It is only a giant liability for these companies. And to be perfectly honest, Facebook did a better job on this type of looking internally than many of the other companies have done that do not feel like they have had the type of public pressure that Facebook has had to have to make these types of huge moves to look internally or to engage in kind of with social science researchers on this stuff. So you're not seeing Google look internally. You're not seeing Apple have transparency calls. You're not seeing this type of stuff. And that's because they're enjoying the fact that Facebook's getting hammered over this.
So, Professor, you mentioned earlier long-term strength and health of the corporation. If, in fact, you were in charge, they put you in charge of Facebook right now and said, that's our goal, long-term strength and health of the corporation, what would you tell them to do?
I mean, I would tell them that, I'm not a person who makes decisions based on dollar signs. And so I would be the literal worst person to run this company, or to run something like this. But what they've created is a quasi-public, quasi-private enterprise that governs public rights, even though it's a public company. And if they don't wake up to the fact that that's what they're doing, it's just not going to survive. Other people will come in, and other types of users will go elsewhere. They will trust other places for their speech, and they will trust other places for their communities. And that is kind of the long-term stuff that Facebook should be thinking about. It's harder to measure, but it is really about kind of where the culture moves, and they're not hitting it right now.
Okay, Professor, really appreciate you being with us. That was very helpful. That's Kate Klonick. She's assistant law professor at St. John's University. We have a couple of pieces of breaking news right now. First of all, ExxonMobil. ExxonMobil is weighing salary increases as it tries to halt employee attrition across its business divisions after recent cuts to jobs and benefits. CEO Darren Woods told employees that they should be encouraged, in his word, by the ongoing salary review process. And meanwhile, Tesla has now become the latest member of the $1 trillion club. Shares are surging today, taking the market cap of the electric car maker over $1 trillion. Coming up, we talk with Parag Khanna of FutureMap about his new book on the mass migration on the horizon. This is Balance of Power on Bloomberg Television and Radio.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
They know me as Magnus TV in Facebook since I'm streaming Axie Infinity. Axie Infinity is an NFT game where you can earn tokens, and then that tokens can be converted into pesos. I play almost 4 to 5 hours a day. I'm earning, I can say it's really a lot of money. It can help to sustain my family needs and also to sustain my own business that I'm starting. I'm a little bit worried about it because some people who join this Axie Infinity thinking that this is an easy money game. They can earn a lot on this game. This game can sustain their life. And I think that is not the point, or that is not really the game. We are trying now to build a community where other players or my scholars can join this esport, playing Axie Infinity for now, even 5 years, I think.